Okay, hi all. Today we're going to move on to a question called farm accounts. This is it has only ever come up as a short question, a 60-mark question, but we'll speak later when we're back in class about how it could be adapted to become a 100-mark question or a longer question also. So in the farm accounts question, it's all about the accounts of a farm. Okay, and you're given some information about the assets and the liabilities of the farm. You're given some information about the money that they lodged in the bank and the money that they spent from the bank as well, a receipts and payments account or a payments and lodgements account, if you like, for a period which is usually the previous year. You're given some extra information about what went on during the year, and then finally there's a you are required to what they ask you to do with this information. Now there are generally 3 to 4 parts, I would say, because part A you're asked to prepare a statement of capital. Part B, there are kind of 2 parts to that. There are 2 enterprise analysis accounts, one for one section of the farm, cattle and milk, and one for another section of the farm, in this case sheep. And then the final of the bookkeeping parts then is a profit and loss account. So all we're going to do for today is this statement of capital for the farm. And the statement of capital is quite straightforward. It's just really, in essence, a list of all of the assets, so all of the things that the farm owns that are worth money, and a list of all of the liabilities, so all of the things, or if you like, the monies that are owed by the farm. And then when you subtract the liabilities from the assets, you get the figure for the capital of the farm. If you like, it's sort of like the value of the farm, the difference between the what it owns, what it has of value, and what it owes, what it needs to pay people. Okay, so if we jump straight in, I suppose, and we just start with, it's going to be a statement of capital for the farm on the 1st of the 1st, 2005. So if we remember with our trading profit and loss and balance sheet, in a trading profit and loss, we talk about a trading profit and loss for the year ended. But on a balance sheet, we say it's a balance sheet on a particular date or as at a particular date. So it's at a point in time as opposed to for a previous year. And so this statement of capital is just like a balance sheet in that it's at a point in time. So it's on one particular date. This is what the farm owns and this is what the farm owes. Okay, so let's start with that title, statement of capital. And remember, you can say as at or on, like on the 1st of the 1st, 05. Okay. Oh, in case I didn't say already, this is the 2006 question as well, question 2 in the 2006 paper. Okay. So, like I said, it's a list really of assets and liabilities of the farm. So we'll start with the assets. Okay, and if we want to find out what are the assets, the things of value that the farm owns on the 1st of the 1st, 05, well then the information for the 1st of the 1st or the 1st of January, which is the start of the year, is generally speaking all up here. There's a little bit we'll get from here as well, but mostly it's all up here. Okay, so if we look at the assets and liabilities of Sean and Mary Kelly, who carry on a farming business, on the 1st of the 1st, 05, so that's the date we're looking for. They had land and buildings that cost 290,000. Well, land and buildings are definitely an asset. So, land and buildings. And we're going to do 2 columns here. So in the first column, we'll put the value of the land and buildings, which is 290,000. Okay, first bit done. Then we keep going through the list again. Machinery, that's definitely an asset as well, fixed asset, 60,000. Okay, next from our list, where are we? Machinery, electricity due 400. Well, that's an electricity bill that hasn't been paid yet, so that's something you owe. That's a liability. We'll skip that for now and continue looking for assets. Okay, value of cattle, 60,000. So those are the cows or the cattle that the farm owns. So they're definitely an asset. So cattle. How much did we say it was? 60,000. Okay. Milk check due. So here's the thing. This is a farm. The farm is in the business of milking cows and then selling that milk to, a creamery or a cooperative or something like that. So when we say milk check due, that's a milk check that's due to the farmer or owed to the farmer. So that's actually an asset. It's not owed by the farmer, it's owed to the farmer. So that's an asset, money that they will be getting. So 2,400. Milk check due. Okay, so far so good. So just listing all of these things in the first column, second column free. Okay, right, what else have we got here? Stock of fuel, so that could be oil or something that's in the farm. So that's definitely an asset, isn't it, as well? So I'm just going to say fuel. 800, wasn't it? Okay. What else have we got here? Value of sheep, 18,000. Again, that's an asset of the farm. They own these sheep. Sheep, 18,000. Okay. Now, that's all that we can get from up there for the assets for the time being. And there are more, and they should really have been written in there, but just to make the question a bit trickier, what they do is they hide the information in here, or at least they hide it in plain sight. You need to know how to get it from there. So one of the things is, we said this is like a lodgements and payments or a receipt and payments account. It shows everything that was lodged in the bank during the year and everything that was paid out of the bank during the year. But here we go at the very start of this lodgements and payments account is this balance of 2,800. That means at the very start of the year, you had 2,800 euros in the bank, and that is a current asset, isn't it? So we can say bank, money you had in the bank at the start of the year, 2,800. Now, that's when the balance is here. If the balance was over on this side, on the kind of the payments side, it would mean that you owed 2,800 at the start of the year. So watch out for that. A balance at the start of 2,800 means you have money in the bank at the start of the year. A balance at the end on the other side means you had this money in the bank at the end of the year. Whereas if it went the other way around, if you had a balance at the start up here, it would mean you owed money at the start of the year. Your bank was in overdraft, if you like. And if you had a balance at the end, which was over on this side, it means you had an overdraft at the end of the year. So the side is very important. Okay, so one other thing then that isn't shown inside here, but that you must always look out for, is whether or not the business, the farm, had any investments. So whether they'd made some outside investments. So up here, if we were looking through here, there's no mention of investments. But if we look down through here, it says they were earning 6 months interest from a 4% investment bond, 600 euros. Now, if they earned interest from an investment bond, it means they must own an investment bond. Okay, so what we've got to do now is we've got to work out what was the value of the investment that yielded this much interest. So, like for instance, if you had a bank account and you lodged money in the bank, you lodged 1,000 euros in the bank and you left it there for the year and there was a 10% interest rate, well then you'd earn interest, just like this interest here, of 10% of 1,000, you'd earn 100 euros interest. But the asset that you would be counting in that case will be the 1,000 euros in cash that you have in the bank that you lodged in that deposit account. So also this interest here, this 600 that you earned, indicates that you own some investments, some maybe money lodged in some kind of a deposit account. Well, in this case, it's an investment bond, but to simplify it, imagine it's money that you have in a different type of account to your current account here, that you've got money lodged away earning interest for you. Okay, so the question now is how much is the value of that money that you invested in this investment bond? So what we've got to do, and it's slightly different in several different questions. In this question, it says 6 months interest from that bond is 600 euros. So if we do some workings over here, if 600 is 6 months interest, Well, then I think we can easily see that 12 months interest or a full year's interest is double that, isn't it? 1,200 is 12 months interest. Okay, so that's the first thing. So that's what you should be earning a year from this investment bond if you should be earning 600 in 6 months. Okay, so the next thing to note is it says 6 months interest from a 4% investment bond. When they call it a 4% investment bond, that must be because you earn 4% per annum with this investment bond. So if it's 4% per annum, you should be earning, and that's 4% per year, and 1,200 is the amount of cash you should be earning, well, that 1,200 euros must be equal to 4% of the investment. Okay, and if that's 4% of the investment, then we can work out what 1% of the investment is by dividing by 4. And we can work out what 100% of the investment is, or the amount that you lodged in this investment bond, or if you know, for simplicity, I suppose, put in a deposit account, is 100 times that. 30,000 is the amount you paid for that investment bond to allow you to earn 1,200 a year, or 600 in half a year. Okay, so 30,000, you own an investment bond which cost you 30,000. That is an asset. We're going to put it in with the assets. And I'm going to stop right there, and in the next video we'll go through the liabilities is right.